Chief Strategist at Belpointe Asset Management. David, thanks a lot for joining us. What is your take on markets, which continue to bump along in record high territory? There's not a lot wrong with that, but are they, so to speak, climbing a wall of worry? Because there seems to be lots of reasons to be concerned about the macro environment as well.
Well, markets always climb a wall of worry, but we do seem to be struggling at these levels, and for some valid reasons. This is the price we pay when valuations are elevated and rates are elevated. That's the alternative asset class. And as long as rates are where they are, investors have some choices here. One of the observations I've made since the start of the year, and what's different this year, is dispersion is off the charts. The spread between winners and losers is really massive, and it creates really an opportunity and a challenge. The challenge at the index level is to push higher when rates are, when rates are elevated and valuations are extended. But also you're seeing some big winners and some big losers. However, you got to get it right. If you get it right, you're killing it. If you don't, you're obviously struggling.
What's some of your advice to ordinary investors to get it right on dispersion, to find the outperforming stocks in a market where there are big gaps between the performance of the winners and the losers?
It's a cliche, but you've got to get into the fundamentals of these companies and really look at what's going on, who's benefiting, who isn't. Some of the usual suspects are struggling here. The other challenge for investors is really right now, you've got a news cycle that does not sleep. And like it or not, we have a very vocal president. And when he speaks, markets can move a couple of 100 basis points in either direction. And I think too many investors have banked on the Federal Reserve giving them some relief. And the one thing Jay Powell's not going to do, he's not going to get inflation wrong twice. He doesn't want to be the next Arthur Burns, who got it wrong in the 1970s. So rates aren't going down anytime soon, and that creates, a dynamic for investors that they have to deal with.
One stock you like with all these challenges in the foreground, in the background, is Cummins, CMI. It's an industrial company that you say can benefit from the AI revolution.
A lot of stocks throughout the industrial complex are going to benefit. The one thing we know about AI is we need power and lots of it. But it goes really beyond just the base load. You need backup power as well. And about 15 to 20% of Cummins' business is power generation, and about single digits of that is directly related to data centers. So that's a growth engine for the company, and you're looking at less than a market multiple. And with nosebleed valuations out there, this can give investors some comfort. It's really pretty close to breaking to an all-time high right now.
What's your view of sectors of the U.S. stock market that are perceived to be beneficiaries of White House policies? The financials come to mind. The big banking, the big banks and the regional banks as well, and let's say U.S. manufacturers. For instance, we saw shares of U.S. domiciled steel makers rally in a big way on tariff news. Not that recently.
I'd be careful on the tariff news, because a tariff isn't a tariff until it actually becomes one. And this president uses tariffs as a negotiating tool, and what might be perceived as a large tariff might be something somewhat less or not at all. As far as the banks go, the deregulatory environment is obviously conducive for a lot of industries. Anything that reduces regulations is going to increase earnings in the financial sector. So that's obviously an overweight for me, as well as many in the market.
Which parts of the U.S. financials do you favor? The big money center banks, the regionals, the insurance companies?
I stay away from the smaller banks, the regionals, because there's always some black swan living somewhere in some small bank in Illinois, say. So my biggest position in the banking sector is JP Morgan, has been for several years and will likely remain so.
And where are you on the market cap question, with investors showing more interest over the past 6 to 8 months in smaller cap stocks?
I'm not a fan of small cap stocks. The Russell 2000 to me is a problem index. There's a lot of garbage in that index, a lot of zombie companies in there. If you want to move down smaller, move into the mid cap area. These are companies that have proven themselves. They were small caps at one time. They've graduated because their models are working. And this is the farm team for the S&P 500.
David Nelson, thanks a great deal, as always, for joining us. He's Chief